Hey everybody, welcome back to the weekly market review for the week ending April 19th, 2024. It's been a few weeks since I've been able to post a video. Thank you guys for tuning in. And we are in the midst of what appears to be a significant market correction. And so the question we're asking today is this a place where we can get a tradable bounce to the upside, or do we still have more downside to come? We'll analyze that in just a moment. Before we get into it, hit the like button, subscribe to the channel if you're not already subscribed. You can also find me on Twitter at Mr. J. Thomason, and you can also follow and subscribe to my weekly Substack, which is at befinanciallyfree.substack.com. New issues are sent out to inboxes every Sunday at 11 a.m. Eastern Time. And I just want to plug this a little bit. I've been doing for the last few weeks, I've been doing a section called Weekend Thoughts. I think I've talked about this in videos prior. I've been addressing it on Twitter, Twitter X a lot, but the importance of time in market corrections, and I'm looking specifically at Bitcoin around the halving. And if we just pop over on the charts really quick to Bitcoin, back here on Tuesday, March 19th, and then on Wednesday, March 20th, we had all kinds of, actually it was mostly on the Wednesday the 20th, we had all these crypto influencers who have, their tens of thousands or hundreds of thousands of followers, and they have their little, Twitter spaces or their little live channels and things like that. Talking about, this is the bottom, this is where you have to buy. And, granted, if you're buying and holding on a long time horizon, then what you're experiencing the last, basically since the middle of March for over a month now, is no problem. But for most people who are in crypto, a lot of retail who's in crypto, and among other things too, don't have the stomach for volatility. Like having been in the markets for a couple of years and been in crypto, I know from observation, from experience, that most of these people, they'll talk a big talk on Twitter about having diamond hands and all that, but the moment that prices come off, we've got finger pointing, we've got complaining, we've got people pissing and moaning, all kinds of things. And most people are getting chopped up. I mean, I wonder how many people for this entire run from the lows in 2022, when everyone was saying crypto is dead, how many people watched it and watched it and watched it, and then we finally got the ETF here, and then people are like, oh, the ETF, and so they bought it into the bounce, and then it sold off, and they're like, oh no, the ETF was a sell the news event, and then they missed this run. And now, because Bitcoin's at all-time highs, and there were all these Twitter accounts posting about how, in 30 days after making all-time highs, Bitcoin doubles. So how many people bought up here, and then they're getting chopped up? I mean, most people, people online talk as if, and I'm going off on a tangent here to start off the video, so you're welcome. People talk all this game about, what they claim they're doing, but the average person doesn't have the stomach for this kind of volatility. And the ones who are online who do have the stomach, they have, part of the reason they have the stomach is because they are, it's not just about buying and holding crypto for them. There are a lot of these influencers who are making all kinds of money from engagement or otherwise, and subscriptions. And so, people, the unknowing, the ones who don't have the stomach for this kind of volatility and don't have the patience to wait for this thing to play out, are paying all these people through their engagement or through their subscriptions to sit on their hands, to pontificate about these things. But in any case, that tangent aside, I have these little blurbs, and I talked about how, around Bitcoin halvings, for example, it takes a long time, on average, at least 81 days around the time of the halving, for price to make a new durable new all-time high, and in most cases it's actually longer. In the other cases it's actually longer. So and then I wanted to plug the newsletter for another reason, because I've been on a really good streak, because I take the time over the weekend to look over the data, look at the technicals, look at positioning, look at flows, look at all the things. And I've been on a really good streak of, kind of projecting. Obviously, I don't put price targets because you never really know, but talking about the probabilities for asset movement. And this week I talked about it to the downside. Sometimes if you pay attention to my newsletter, I say it's uncertain with a downside bias or an upside bias. But whenever it's like this, just to the downside, that's some strong conviction based on the data, based on everything I'm looking at. And of course this week, if I pull back up the S&P chart, S&P this week was down 3%. NASDAQ's down over 5%. Russell is down 2.9%. The only of the equity indices that wasn't down, the Dow was down 30 points on the week, but it had dropped, 5% over the previous 2 weeks. So, I've been doing a pretty good job, and that's not to say that every single time it's going to be right, because no one is ever always right, but it's a pretty good streak, and I just am plugging for you that I feel like I do as good a job as any, and maybe better, at reading the tea leaves and looking at the compendium of indicators and data to make a pretty good assessment of where markets are at and where they could be heading and what the highest probability is. So if that's something you're interested in, you can find the link to that in the description of the video below. In any case, going back to the original question, where are we at, and what is likely to transpire? What am I looking at? So I'm going to change the chart a little bit. You can see the RSI popped up down here. I can expand this up a little bit so that you can see it a little bit better. Today the RSI is on the S&P futures is reading at a 30.35, so it's essentially oversold. The Nasdaq here is 29.14. That is oversold according to the RSI. The Russell not quite curling upward. Dow was nearly oversold, kind of curling upward on today's price action. And what I want to do is I want to point out some reasons why you can be near-term bullish here. Let me go to the SPY ETF. Again, we didn't quite get oversold on the SPY ETF. We're at about 31. But what I would say is, like, if you go back over the course of history, price history, and I've done this from about the last 30 years of time, it's usually pretty statistically a pretty high statistical likelihood that when the RSI is below 35 and the closer to 30, the higher the probability gets. But there's a pretty high statistical probability that you're going to get a bounce. And so in terms of like taking a buy, and waiting to see what happens, usually on a forward basis, the next 1 to 5 days, the hit rate is usually around 70 to 75% on the long side, which again, it's not 100%, it's not a certainty, but it's pretty good. And if you want to come back, look at the price around these levels, when you hit oversold or almost oversold back in September 2023, a little small bounce for a day. It hits it again, price bounces, a couple points, a couple of days for about a week. Then, of course, we rolled over. And then the last time we hit that oversold reading, that was the bottom of that move from that correction. There are instances where, the market gets oversold and then it does go down a little bit more, but like it's so hard to catch exact bottoms, and very few things will always indicate exact bottom. Like in this case, from the moment that the oversold reading on the close of the SPY happened, you did drop from 368 down to a closing price of 356, around 356, but that was the bottom. That was the low. from the 2022 bear market around that time. So, I mean, if you bought, you had to take a little bit of downside, but then if you did, then you were able to stay long. If you were able to stay long and strong, just to buy and hold alone, you'd be way up on that. So there's things like that. And occasionally, like during bear markets, you get these oversold readings. You can take advantage of bounces. It happened, it just happened that one time in early 2022. Anyway, the point is that usually, not all the time, but usually, like the March 2020 crash, that's one of the exceptions. When these crashes happen really fast, that's not necessarily always the case. So like for example, here, February 2018, when the market kind of flash crashed down, we hit oversold, but then we still ended up going down more, quite a bit more after that. So February 2018 was the same as March 2020, February, March 2020. Same thing happens here in 2015, and just kind of over time, you see it in 2011. And it obviously happens throughout the bear markets of the great financial crisis as well as the dot-com bubble. But my point is that it's every couple of years you get a period of time where an oversold RSI reading still leads to more downside price action. But the largest percentage of the time, a bounce is going to happen, and the percentage is even better when you do it on the Qs. And the Qs, which is the NASDAQ ETF, did close at below 30. And this has a hit rate of 75 to 80% of positive trades. So the odds are even better. And if you look, the bounces took place from the correction last year in 2023 on the Qs. The bounces were even better, took place from an even higher level, and the bottom wasn't even oversold. So I think that the RSI is just looking at that one technical indicator is a pretty good. It gives a pretty good sense that the markets can bounce into next week. Let me look at a few other things. The dollar. The dollar was overbought. Now I actually think. I kind of go back and forth. I mean, the dollar, if I pull up my tide indicator, the dollar is in bullish tide. And so that means that the likelihood is that the price continues to move to the upside. That's the greatest probability. Could this end up being just like in September where we're seeing a little peak right here and we're about to roll over? Possibly. But this could also be like 2022, late 2021 and 2022, where you had the dollar getting overbought in bullish tide, and it would move sideways to slightly down and then just keep going back up, get overbought again, sideways to slightly down, get overbought again, and so on. I think over the next week, next week, the dollar is poised to move sideways or come off. And I think that there's a lot of heavy positioning. I haven't updated all my positioning charts quite yet, but there's a lot of pretty heavy positioning against currencies in the DXY basket versus the US dollar. So a lot of people are pretty short euro, pretty short Swiss franc, pretty short British pound. Definitely big shorts on the euro and franc, which are a part of the DXY basket. And the euro specifically is like 53% or so of the DXY. So all this has to do is unwind a little bit as far as the euro goes, and as far as the euro short goes, and the DXY will move at least sideways, if not down. And if the dollar is moving down, that's generally net positive for risk assets. So on the dollar, that's something I'm watching for. The same thing on the 10-year. Now, side note, back when this thing was starting to cross bullish again back in February, I know we had some sideways chop, but I had mentioned that if this thing crossed again, we were going to see 475. We didn't quite get there yet. We got about 9 basis points or 8 basis points away. So we'll see if this does indeed move up further. But I think the technicals line up to where the yield is going to maybe back off a little or move sideways. and that would be supportive of a small relief bounce. And you can actually see if you go from late July and early August, when 2023's summer correction started, you had a couple of occasions where you had an occasion where the yields came off, and those provided some relief rallies to the equities. So I think that right now it's poised to come off. We were just coming off of like overbought conditions on the yield. And if we were to go to, if I put in, instead of US 10, we'll go US, we'll do the bond itself, we're coming off of oversold. So however you want to look at it, in all likelihood over the next week this could consolidate, and if that does, that's going to be net positive for risk assets as well. I also wanted to point out the VIX. So the VIX is elevated. We did pop above 20 today for a while, but we closed down below. We sold off of it, and we, despite all the things going on today, we could not close at a higher level than on Monday this week, which was our initial down day. So I think that it's entirely possible that the VIX could also maybe consolidate a little bit, come off. People might sell volatility, which would be, again, net positive for risk assets. What else was I going to go to? Oh, the stocks trading above their 50-day moving average, as well as over their 200-day moving average. If you pay attention to my newsletter, I look at this pretty frequently. It's a pretty good indicator. At least the 50-day average indicator is pretty helpful in terms of like the near term. It actually did a really good job of catching the bottoms of some of the bounce from the summer and fall correction last year, as well as getting the exact bottom as well. What was really interesting is, despite S&P being down 45 points on the futures and the NASDAQ being down 366 points, what was really interesting was on the S&P to see breadth actually get better. It actually jumped pretty significantly, all things considered. So it was definitely a market cap weighted drop today, but actually the large majority of stocks in the S&P 500 actually moved higher. So there's some rotation going on here. The leaders have been getting sold, which is generally obviously that's going to be net negative overall. But there's a there's a rotation that's happening as those higher beta tech stocks are being sold. And so there's two different ways you could look at this generally. S&Ps could sell off if the stocks that have been rotated into get sold next week, or on the flip side, S&Ps can rise if the stocks, like the large cap tech stocks that have sold off this week, if they rebound. So I'll look at that in just a moment. But in any case, it was interesting to me that breadth on both fronts actually increased on the day. It's down on the week in both cases, but on a day where everything was down really extreme, it was still up overall. And then if you look at the Russell 3000, which is the basically 95% of all risk assets, it was up. And the all important stocks over their 200-day moving average bounced off of the 50 level and continued and actually resumed up. So the question will be for next week: are we going to see this not necessarily a broadening, but are we going to see this rotation? If we do, then that's actually going to be relatively healthy, and I think again that supports the idea that there could be a bounce next week. So I would say that. So I actually really do believe. Actually, I was gonna let me go to NVIDIA, which obviously this has been one of the market leaders for a long time. You see how overbought it was. It registered its first overbought back on January 9th or 10th, and was overbought through this ginormous rise, and then it's been selling off. So there's a lot of things I could say about NVIDIA, honestly, but we're down. NVIDIA's down. NVIDIA's in bear market territory. It's down 22.38% from its from its highs. One thing I'll just say here, I've been retweeting a lot of this stuff, so you can find this on my Twitter if you're interested in it. Back on March 8th, there was that fat reversal day in the semis, and you might remember, go back and check out that video. I suspected that this was a sign of things to come. That it was at this spot where I started preparing to position for a market correction. And despite the fact that, like, I mean, NVIDIA has not made a higher intraday even high. Definitely, I mean, it closed up close to that, but it has not made a higher high than it did on March 8th. NVIDIA is almost oversold. So this is going to be something where if we get some upside in this, then it's going to provide some fuel to the fire in terms of getting a good market bounce here. If we look at SMH, which is semiconductors, semiconductors is basically almost over. It's basically oversold. It's technically like barely above the 30, but it's technically oversold. And like NVIDIA, has not seen a higher high than that Friday, March 8th, massive bearish intraday reversal that took place. The semis are from their high down 17%. So what's pretty interesting is that NVIDIA, which has been the darling for a long time, has actually led further down, has seen more downside than the whole semi space as an aggregate. So I think that's kind of important to note. But I will say that it is oversold. So if we can get if we can get a bounce here, that I think that's going to provide some support for markets. Microsoft, it's down at the same levels it was trading at, like kind of some of the lows that it poked at earlier this year. It's almost oversold. If you pull up the Apple chart, Apple's not oversold, but it is seeing an RSI divergence. You can see, that it's making a lower low on the chart, but a higher high, but a higher low on the RSI. And so there's obviously some divergence here that if it plays out and we get a boom or we get a bounce to the upside, earnings are coming up for a lot of these tech stocks, then that could obviously contribute to S&P rally. So all this is to say, like I've listed out a whole bunch of bullish things that are bullish over the next week, and my base case, like full disclosure, my base case is that risk assets bounce next week, and that we see a pullback in the dollar and yields and in the VIX. However, there is a bearish side, and one of the things that is the most bearish to me is that every day this week, we saw a big upside intraday, and then it sold off. And that includes on good news, good earnings reports and whatnot. The S&P could not stay up during the day. The NASDAQ barely closed up on Tuesday, but same story. Could not, got these intraday reversals where they were down, stocks were down, then they went up and were up pretty good, and then reversed those intraday gains and closed down pretty strongly closer to the lows. You can see it on these charts. That's not a good sign. And the reason why I highlight that because not only is bad news hurting the market, so we got the CPI report on the 10th last week, and obviously the markets were down on the rising inflation. Markets were down on all kinds of different bad news, but even on the good news, during this whole run, basically from the October lows to the top last month, every piece of good news was enough to rocket the markets higher, and then every piece of bad news may have caused stocks to sell for a day or two or three maybe, or to underperform a little bit. But then the markets always fought it off. I can't tell you how many times I saw during this run up stocks would be down or sideways during the day, and then the last hour or last half hour especially, you just see these rocket ship moves to the upside. That's not happening. And even today, particularly on the NASDAQ, despite the fact that it's oversold, it just had such an ugly close that I'm concerned that that despite the oversold reading, like, to me, this is the kind of thing that where there's an oversold reading, but there's enough room for follow through that it could sink even further, like in the 2022 bear market or in February and March 2020. Like if you were to go back to March 2020, the first oversold reading happened 3-4 days into the sell-off, and then we still dropped another 20%. So that's what's concerning. Is my base case that we get a massive drop like that, like just the rug is pulled and it's a waterfall down? No, that's not my base case. I think we're going to bounce a little bit here, get rejected, and then establish a little corrective downtrend. That's my base case, but I don't like the close today, especially going into a weekend. I'm sure there's a lot of uncertainty regarding the geopolitical conflict in the Middle East. I just don't feel super good about that. And then again, not even just in terms of this weekend, but over the medium term, over the next 1 to 2 months, I think that something has changed, and I think that the markets are now, they're telling you, like when the market does this, when it can't even close up on good news, when it keeps giving away all its gains, it's telling you something. It's telling you something in a very, very big way. And right now, I think what the market is telling you is that at the very least, it needs to check its rally that it's had. At the very least. At worst, what this means is, like, what this could be signaling is that this is not going to be just a small pullback or a small correction. This could actually be something really big. And so that's what we have to be watching out for. So this is a situation where, for myself, I've been short the stock market for about 2 weeks, a little over 2 weeks now, which was great, for me. It's been good, but actually overnight I covered those shorts. Took a little long because I figured that today on the let me actually pull up the 10-minute chart. So I had been short, and then we had this giant sell-off, and kind of right about here, around 11 o'clock Eastern last night, I covered my short and then just took a long because I figured that the panic was overblown. And let me go back actually, and I could show you back in February of 2022. It was, I believe, February 24th, the night of, February 24th, I believe, was it. But the market sold off pretty extensively on the news of Russia invading Ukraine, and then not only recovered it, but finished up despite that. This is a little bit different. So obviously we went down really far in the panic sell. The S&P went positive for a little while today, but then we still sold down. So what I ended up doing personally was bought down here, saw this bounce, and then when price wasn't still maintaining its upside, I basically sold, around 8 o'clock. Around 11 o'clock Eastern this morning, and just kind of sat there and watched the rest of the day. So I feel pretty good. I'm on the sidelines because I'm not really sure. I'm not quite so willing to take the stab right here. We'll see what happens when the futures open on Sunday night, but I'm not willing to take the stab at this point because of some of the uncertainty, despite the fact that I actually am pretty bullish for the next week in terms of getting a bullish bounce. I'm not saying that I'm bullish over the medium term because I do think we are going to continue this correction over a period of time, but I do think we need to see a little relief bounce. And I'm more than happy to stand aside and watch and see if that's what develops. And this way, if the futures gap down over the weekend on Sunday night, then obviously I'm not going to be hurt by that. So that's kind of where things are at there. So over the near term, like I said, base case is bullish, like bullish bounce. Over the medium term, I think we're still going to be in a corrective phase for some time, unless the conditions change and the market tells us that the conditions are changing again and in a more positive way. But of course, anything can happen. And with that, I'm gonna let us go. It's been a little over 30 minutes. Thank you for tuning in. Those of you who have stuck around this long, appreciate you guys. We spent a lot of time just talking about equities. Obviously, there's a lot of stuff going on with metals and whatnot, but right now it doesn't look like. Right now, I don't have any edge, and without looking at and doing my research process, I don't have much to say on that at this point. But we'll leave that for the newsletter. If that's something you want to subscribe to, I highly recommend it. And yeah, I'll leave it at that. I'll see you guys next week.